Over the last 4 years, I have experimented with my RR ratio and I found the golden middle that works the best for me, and now my equity looks like this. In this video, I will explain you 3 main things. First one, what RR really is. Second, what benefits it brings. And third, I will tell you 5 non-obvious ways how you can adjust this parameter for the biggest efficiency and how you can grab as much money from the market as possible. What is more, in my trading I use real data by analyzing volumes and actions of big players, and that helps me to execute best trades and take money to my pocket. So I work with numbers every single day. And to be honest, I haven't seen on YouTube or other platform that somebody shared that style of trading. All other public traders, influencers just talk about ICT scam, smart money concept and other shit. It's like 80% of trading content across all platforms. And since you are watching this video, I can assume that previous videos about those concepts didn't help you much and you still looking for the solution of your main problem: how the hell you can finally make profit in trading. I know how it sucks, and I'm here to make your trading journey easier and profitable. Without further ado, let's switch to the scheme. So first question is what it is. Risk reward is the ratio between potential profit and loss. For example, we have a deposit of $1,000 dollars. We want to open the trade with the potential risk of 1% of our deposit with the expectation to close the trade with 1/3 ratio, which means that we are ready to lose 1% of the deposit to earn 3. It is super easy to see if we go to the trading view and open the long or short position. Here you can see how this ratio instantly changes when I move the potential profit or loss for the position. Second question, what benefits it brings? First of all, it gives us understanding of whether our strategy works or not. Here you can see a scheme of risk-reward ratio with a win rate. So for example, we have a strategy that has a win rate of 40%. If our average RR for that strategy is 1-to-1, we will be unprofitable. But if the RR will be 1 second, we have a good chances to have enough money to buy bread and butter and don't die starving. If we take, for example, a strategy with only 30% of win rate, it is enough to have 1/3 or even 1/4 RR to bring profit to your home. All is very simple, but the main thing is to just don't overcomplicate basic information. Here I want to highlight that the perfect trading strategy with 95%, 100% of win rate just doesn't exist. Maybe if you had a couple of billions on your account, you could successfully manipulate the market and know in what direction the price will go. But I have doubts that you are a son of Elon Musk or Jeff Bezos or Trump. Let's assume you are just average straight guy, yes, who wants to make a living from trading. So when we don't have 100% of win rate, we need to be ready for what? For losses. Losses are inevitable part of trading, and without them you can succeed here. And here I'm talking about regular losses, stop losses. Only by using predictable losses you have a chance to succeed here. So just accept them and move ahead, yes, move on. It's one of the most powerful character traits that every single trader can have. Just move on regardless of your fails and losses. I have to add here that it's super hard to have constant RR in every single trade. Sometimes it can be different. You have to calculate the average RR of 70 or 100 trades and only then make some conclusions. You can say, then I will execute trades with highest win rate and biggest RR and will be rich as But here's the problem that calls delusion of high RR. On this chart, I want to show that the bigger RR is, the smaller win rate becomes, and it happens for a reason. There is a straight relation. It is super hard to have a big RR and high win rate. Now, pay attention to the second chart, RR, with the EY, expecting value. In a few words, it's something similar to the probability. So the bigger the RR, the lower the probability that you will manage to execute your setup correctly and earn money. Now I will explain why. First of all, your setup will appear maybe once a month, maybe once in 2 months. Now imagine that you have been waiting for your setup for 2 months and then you missed it because you were asleep or you just had your urgent business, yes? So what now? You are forced to wait for your setup for the next 1 or 2 months. And what is more, nobody guarantees that that trade will be a winning trade. You can just get a stop loss as well. As for me, it's not the best strategy to make profits in the market. By seeing these two charts, we can confidently say that RR is a crucial parameter for analysis. And the easiest way to test your strategy quickly is to observe the RR and win rate. Then all what you have to do is just try to twist up these parameters so they fit in the profitable sector. If it's impossible, you have to completely change your trading system. There are a few options to use RR: floated and fixed. First one, floated RR can be high or low risk depending on the situation. If you see a great opportunity, A+ setup, it makes sense to take a bigger risk and potential profit at the same time, because the chances that you close your trade in profit are big. And the opposite. If you see your setup but something is missed, instead of skipping the trade, you can take a much lower risk and outwork the trade. Why? Sometimes it is necessary to test your strategy with a slightly different frames and conditions to find the best one. So in that way, you are leaving open window for new opportunities and new experiments. The last one is fixed RR. As you can already assume, here we use fixed RR for every trade, but it has cons and pros. Cons: by trading with fixed RR, you consciously refuse from significant profit because you might miss big potentials of trades by closing your trades too early. Pros: it is the simplest way to trade because you don't bother with volume in your position, aka lot size. You just work with the fixed risk, and it is much easier to correct our strategies through the statistic due to reducing changing parameters. In our case, it's RR. So either we have to change the win rate by improving our setup selection, or we change the strategy for the certain asset, or we change the trading asset where our strategy will be more profitable. Now, the last part. 5 non-obvious ways how to adjust this parameter RR for the biggest efficiency. From my own experience, I would recommend you to trade with lower RR, like 1 second, 1/3. Because, first of all, you automatically get better win rate, because it is hard to predict the price movement for the next 1-5 minutes, but in certain situations it is possible. And the bigger the time spent you want to predict, the harder it will be to do this. So the smaller RR is, the easier it is for us to close our trades in profit. Win rate through the roof. Second, your trades appear more often. Smaller potential of trades equals bigger variety of situations. Third, your trades outwork themselves much faster, because for the price it's much easier to make 3-5% of movement than 15%, 20%. Yes, you will wait, like for 3-5% you will wait maybe 5, 10, 15 minutes, and for 15 20% you can wait for 2 weeks. Fourth, the next benefit is on the psychology side. It is much harder to see how your position with 5 or 7% of profit just rolls back to the entry point and you close your position in break even or even loss. It is so painful to realize that you have spent 2, 3, 5 days with profitable position and didn't close it because you placed your take profit much higher. In this case, you haven't earned anything. And what is even worse, you wasted your time when at the same period, in the same time, you could execute 2, 3 trades with 1 second, 1/3 RR and be happy with your profit in your pocket. Here are examples of trades. On the left side of your screen you can see the DOM, aka order book of the coin Trump, and on the right side is a chart of that coin. By seeing footprints, aka clusters for last 10 minutes and big activity from the buyer side, I understood that currently buyers are much stronger and the price will go up. So I started gaining my position carefully. The target zone was near $72. I placed a few limit orders a little bit higher to partially fix my position and move my break-even point lower to comfortably sit in the position. When the price went up and partially fixed my position, I placed my stop loss near the price where I added my last volume to my position. Then I placed 3 more limit orders higher to partially close my position. When the price reached the level of previous high, I manually closed my position. So it's the example of quick trade where I see all confirmations for opening my position inside of my terminal. Fifth, due to the faster execution of trades, you will make more trades and at the same time gain more statistic, so you will get necessary data faster and improve your trading much sooner. So my friend, that is all for today. If you want to get more crucial information about trading, learn how to trade like hedge fund traders do, learn strategies that allow me to crack my poverty, like recognizing big players and trade in their direction, then join my free trading community. Link will be in the description. As always, wish you a green PNL. Bye!